This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. My guest today is no stranger to this show. He is one of those voices that helped me to launch this show. Even if it was not intentional, he gave me his time. He allowed me to ask him questions. He gave great answers. My guest today is Jack Schwager. He is the author of Market Wizards, New Market Wizards, Hedge Fund Market Wizards, Stock Market Wizards, and today, Unknown Market Wizards. The cool thing about Jack, even though you may have read all of those other titles, and I have, this new one fits like a glove. It's a natural extension. It's fresh. It's interesting. It makes you go, wow, what is going on? How did I not know about this? Yeah, in 2020, after all of these years, Jack has the ability with the pen and the interview to make you take notice. Now that's damn cool. Without any further delay, let's jump right in and talk a little Unknown Market Wizards with Jack Schwager. Jack, there's a couple big picture things I want to talk about out of the gate before we dive into your newest work. Things about you, your writing style, how you create your books. I know from experience, having gone through your books, that the people, the traders that are often in your books, can have very strong political opinions. Now, we are in the political season. But I think what's so interesting about your book, and I actually, from memory, I would say it's often pretty divided. You're going to have guys, it's not discussed in your book, and that's going to be my point in a second, but you're going to have guys on different sides of the political spectrum in your book. But what I find so interesting about your books, in a day and age where there's so much polarization, people at a human level really don't hate each other that much. But I love the fact that you keep it at the content, you keep it at the trading. And ultimately, trading, what you write about, is not political.
Yeah, I mean, that's certainly true. Yeah, it's not political in terms of right or left. Certainly, I've interviewed traders that run the spectrum from really extreme right, like somebody like Monroe Trout, who's Ayn Rand proponent, or he was, I'm sure he still is. On the liberal side, Dennis, for example, or others. It runs the spectrum, and political views don't really make any difference. Although I will say I did have one line in my book. I actually said, nothing to do with politics, but I said, I bet that if Trump was a trader, he'd be awful because he never admits he's wrong. I don't know if you consider that a political statement. I just consider it a factual statement.
It's nice because I think with so much polarization out there, that when you can pick up a work and you can find yourself, and I did with your newest book, Unknown Market Wizards, you just find yourself getting engrossed in something, and it's more about the learning or the experience or the storytelling, and you don't have to feel, as America gets more and more divided, none of that stuff plays a role. And so I commend you for taking that high ground, because I think less and less people are.
It is tempting for me sometimes to express opinions in that regard, but well, you actually used a very interesting word, and I think I'm glad to hear you say it, which is storytelling. Of course, my main aim is to provide stuff that's useful for traders, and I think the books do that. But that's not a big deal, or it is a big deal, but it's certainly nowhere near enough. You also have to make the book readable, entertaining. I think the reason the Market Wizard books have been successful is because I paid a lot of attention to that side of it, not just the trading side, because otherwise they could have been pretty boring books.
I think when I picked up Unknown Market Wizards, I could have immediately transported myself to picking up Market Wizards for the first time and just continuing the read, continuing the storytelling, in the sense that if one liked Market Wizards and all your stuff, and obviously a lot of people do, this is just a natural pick-off. It's quite amazing because how many decades difference are we talking right here?
Over 3.
It feels exactly the same. That's a real skill to keep what you built and created and then find all these new players and keep that same ethos moving forward. It's really cool.
Oh, thanks.
Another big picture point here. I can think back to the first time as someone who knew very little picking up the Market Wizards. Unknown Market Wizards is dense. I see a lot of books for this trading podcast. I mean, for this podcast, Beyond Trading. And a lot of books today, a lot of business books today are 200 or 300 pages built around one great idea. Your books have never been like that. I know this sounds like I'm kissing your butt. I want to express it to people because it's so true. You cannot pick up a Market Wizards book and just read it without thinking. You force us to think.
Once in a while, I'll go and look at reviews in the books. Most times the reviews are very good, and mostly 5s and so forth. But once in a while, you get the 1-star. They make me laugh because the 1-stars are invariably something along the line. They're complaining there wasn't a system or an exact way to trade put out in a silver tray for them. Just completely missed the whole point of the book, which is that's not what makes successful trading. It's not a cookbook recipe. You do 1, 2, 3, 4, 5. You use this moving average and you never buy on Tuesdays or whatever rules you want to make up. But people sometimes look for that and they kind of don't even know what the right question is. My focus really is on the things that are not a recipe per se, but they have a lot of insight and useful information. You just have to kind of apply it to your approach and think about it.
It's an interesting point about the 1-star folks. I would think that they could have the ability to, if they feel like they've got this criticism, to stop for a second and say, hold on, what am I missing? Why is this guy Jack getting this opportunity to talk to all these traders? Why do they trust him? Why are they saying what they're saying? What am I missing, right? I mean, I think that's one of the tricks with a lot of books is if you really want to criticize it, but a lot of other people love it, you almost got to step back and say, hey, what am I not seeing here?
And we're only talking a very small minority. I don't know, it's a couple of percent out of maybe 2 out of every 100 readers or something like that. But they're probably complete beginners and kind of go in with the idea that, oh, yeah, this is a good way I can spend an hour a week and make $1 million a year. And this book is going to tell me how to do it. In the preface of this book, I basically say, if you are expecting to find step-by-step instructions on how to make 100% a year in the markets with only 2 hours of work a week, quick, put this book down. You've got the wrong book. That's my message right out front. That's not what this book is.
Let me talk one more big picture point about finding people, finding market wizards to put in a book like this. Now, I know a guy like you, you've got a lot of experience with a lot of strategies. You also have a lot of experience with performance data. So I'm sure, and you might even have a story about this, that you've had some very credible person at some point in time, maybe more than one, approach you with a track record and a little Jack due diligence pulled on a string. And the next thing you know, it all fell apart. So as somebody like you, you've got to kind of look at that track record. You've got to understand the strategy. But why don't you speak to the idea of confirmation, how you go about making sure that these market wizards are legit? It's a real process, isn't it?
Yeah, true story, and relates to this book. About a year and a half ago, I get this email from a fellow, and he says, this may sound hard to believe, but I turned the $3,000 account into $50 million, and I've kind of sort of been on my own and never had any exposure or whatever, but I'm kind of thinking maybe I would like to share my story. You get that type of email, first thing you think is, yeah, right. I'm not going to prejudge without having given a person a chance. But I basically say, look, I'm not looking to write another book right now, but I'll keep your email on file in case I change my mind. And it so turned out 9 months later or whatever, I did decide to do this book. So I wrote him back and I say, your email was quite interesting. Of course, I need to confirm it. Send me your statements. And sure enough, I mean, he had statements back to, I think, about 2009 monthly statements. But before then, for whatever reason, I think a different broker or the records didn't go back. He didn't. So I said, okay, send me your tax statements, end of year statements, but enough. Maybe you have the end of the year, not the monthly. I forgot. I did so many of these, I forget which is which. But anyway, he's totally confirmed his performance. And actually this year, he's taken at 50 and he's over 80 million. He may be coming up on 100 million. I don't know. You can't go with somebody like that and just say, okay, send me your performance. They send you an Excel spreadsheet. Wow, that's great. You really have to confirm it because some of these, actually, I mean, it's true of all the traders. There are traders in this book where they've got, let's say, 12 years, 13 years of average return of 300% annually. I mean, you can't possibly believe those type of numbers unless you really physically see the statements. And they were good about getting me all the statements.
Is there a side of you, and look, I'm talking to somebody who's probably the most renowned guy in the world for interviewing top traders. Is there still a side of you, even when you see statements with Bernie Madoff in the rearview mirror, that you still kind of feel like, gosh, how can I trust? Is there an extra step that you have to do, or is it using all the experience you have to kind of understand their method?
I think Madoff, if I remember correctly, had his own kind of brokerage. So if it was some unknown type of brokerage, I haven't run across that, but if it was, that would be a red flag. In this case, some of them were like Ameritrade, and I kind of know Ameritrade because I have an account. There was always known brokers. And there wasn't a case where I interviewed someone where he couldn't confirm it. I mean, he only had statements for the last year and a half, and it was a Canadian firm. The brokerage statements were terrible, and he didn't supply back, I decided there wasn't just enough verification there. I couldn't use it. And you can tell, I mean, what a real statement looks like from a real firm. I mean, I guess it's possible for somebody to counterfeit something and elaborately and stuff, but that would be an awful lot of trouble to go through counterfeiting hundreds of statements, monthly statements, to get in a book. After interviewing these people, you sort of get a sense as well that they're the real thing.
You did not expect, going back 3 decades to the classic first book with all these names that were either huge then or became even bigger, you did not expect with this book to find performance that matched or exceeded, but you did.
Yeah, you're paraphrasing what I said in the beginning of the book. The biggest surprise I had in the book, doing this book, was the performance level people I found, because I kind of assumed a number of things which weren't true, but I assumed that the records of people like Marcus and Kovner and Paul Tudor Jones and Trout and so forth, in those early years, when I was interviewing them in the 80s, we're talking about records that would go 70s, 80s type of thing. But I assumed those records were set in a time where a number of these traders were, if not technical trend following, trend oriented. You had these massive trends in that period, partially due to the inflationary period. A number of factors coming together. Back then, trend following, you would know better than anyone else. Go back in the 70s, there weren't that many people doing it. This is pre-PC and so forth. So I kind of assumed that those records were set under special circumstances. Moreover, what you've also had in the interim is this massive increase in computer power and this sort of wave of quants entering finance, physicists, mathematicians, computer scientists, astronomers. But all these people, very, very strong quant skills. And you have firms, as you know, many firms with scores or even hundreds of PhD quants. So I kind of assume those phenomenal returns, you can't do 200-300% a year anymore. It's just not possible. So my biggest surprise was to find, yes, you can. And there are people in here that their performance might be the guy I mentioned who was 2,500 into what is now 80 million. I mean, Marcus was phenomenal because he took 20,000 into 80 million. He took 2,500 into 80 million. So I was able to find people who had extraordinary performance. And it just says that despite all of the changes we've seen and all the computer power and all the PhDs in it, there's still a place for we're talking solo traders. They don't have staffs or anything, just one guy in his computer. They have been able to put up extraordinary numbers for over a decade in most cases.
I'm going to take you through some names for some highlights. I really want to implore people, because it would not do the book justice if I just sat here and tried to go line by line and say, Jack, tell me about that. I mean, it is really a storytelling book, and it's many, many stories, fantastic stories of trading success. So I really implore people to check that out. I'm curious from your perspective, though, and this can apply to your current book or the whole series of the Market Wizards books. You get in, you've talked about the process of looking at performance. You start to understand what that particular trader is doing, at least what they're telling you. You probably got a lot of experience yourself. You're looking at the performance, you're looking at what they say, you're trying to match things up. How do you generally come down on the side of knowing, when it's all said and done, what that particular trader is doing. I'm sure for many traders, you figured out or they told you exactly what they're doing. Are there some, though, and perhaps even in this book, where even you see the performance, even they tell you what they're doing, you're still scratching your head a little bit, kind of going, I wonder what their real sauce is, so to speak?
I don't think I ever did an interview that I put in a book. I've done interviews that I've left out of the book. I don't use all the interviews I do. But the interviews that I do put in the book, I always have to answer the question of how are they doing it? It has to be clear. The methodology, either the trader himself explains it or I explain it in a summary, or both, how the trader is doing it. Now, even though I'm telling readers what they're doing, doesn't mean you can do it. You can learn from it. You can get ideas from it. In some cases, people are able to somewhat duplicate things. In most cases, the traders have some extraordinary innate skill. It's not enough to just know what the techniques they're using. That's only part of the sauce. The rest of it is their tremendous ability to apply that efficiently. One of the traders I mentioned who make 300% a year tells you quite clearly what he does. He basically focuses on major market events like central bank announcements, et cetera. And he really prepares himself so he knows in and out what the possibilities are, what he's going to do under any circumstance, both for when the news comes out, what it is, and both how the market reacts to it. For every possibility, he knows what he does. And then he mentally rehearses that, and he meditates, and he prepares like an athlete before a big event. He's sitting there knowing exactly what he's going to do with his hand on the mouse, and the report comes out, no matter what it has, he's got an instantaneous reaction, and usually with a large order, unless it's something which is completely neutral and there's no trade. But if there's any opportunity in his mind, he's ready instantaneously to take the trade. And if he's wrong, he'll be out in a minute.
Is this Amrit Saul?
Yeah, very good. So the description is good. You already pop up with the name. So exactly. Amrit exudes confidence, by the way. And he's also, I got cross-verification. 2 of the traders I interviewed, the 3 of them were in the same prop shop at one time or another. Amrit was a senior guy. So he at one point or another tutored the others, not tutored them point of developing their methodology and style, but giving them advice that was useful. In one case, one trader, he saved the trader's job because the firm was thinking of possibly letting him go. And he said, no, this guy's going to be good. And of course, he was right.
Unicorn sniper.
Yeah. In 2 words, I had to describe and he describes himself. He says he's been told, and when he said he's been called by people who know how he trades, unicorn sniper, and he talks about himself that way. He's just looking for those isolated events where there's tremendous potential and limited risk relative to the potential, and then he takes a shot. If he's trading for sort of trades that don't quite make the cut or trading when he shouldn't, I mean, those are all mistakes in his mind. If he's doing it right, he's just taking not that many trades, but when he takes the trades, there's like a potential for an enormous payoff. He can make 25, 50% in a day or even more. In fact, I think it was him or one of the other guys that had a 100% day. Now, then people are going to say, oh, well, he must be taking a huge amount of risk. Well, the point is, yeah, if he held the position, he could lose all his money. But he is so disciplined in his risk control that he will never make that mistake. And if the market doesn't act exactly the way he thinks it should in response to something, then he's wrong and he's out. So he cuts his loss very, very quickly.
Let's go to a word that you brought up earlier, and it's a really important word. It's in your preface. It's across your book. It's really kind of the background here, and it's the word solo. You and I right now are, quote, solo in many ways. I started to experience this solo concept in the 90s, and I just loved it. I needed to work with people if I needed to on assorted projects. Okay. But I loved that sense of being solo. I didn't want 1,000 employees or whatnot. I guess if I stumbled into the Amazon, I would have gone the Jeff Bezos direction. Why not, right? But I think for most people, the bell curve, solo is one of our best options. And I think that's what's so motivational about what you've written with this book, is it reminds people. You can have all the excuses about, well, I got to do this, I got to do that, I got to be with such and such. Well, not really. If you really just focus on it and you put a lot of time and effort in, you might not be like the guys in your newest book. You might not get that big or whatnot. But solo is an important word in this day and age. With all this technology, you really have the chance to be a solo person and do big things.
You're picking up on a key theme in the book. And It's very similar to other market wizards in many ways. But what makes it different is I went out on the onset to find people. Well, the unknown and solo are almost synonymous. I was looking for this image I had that there were people globally, and you can appreciate that having relocated to Vietnam and stuff like that. So there are people globally who are just kind of really good traders and just trading their own account, and nobody knows who they are. They never manage money. That's what I was trying to find. And that goes with the solo concept.
Do you think most of those folks knew it in the beginning of their success or just appreciated it later on that they were solo? If you take 3,000 to 50 million and you're still solo, man, what's the point of joining a group at that point in time? You've got all the freedom in the world. You can make your own choices. You don't need all that other stuff.
Yeah, I think for the most part, they just started that way and it just worked well. And I think a few of them might entertain managing money, probably carefully under the rights. But I think if they manage money, it'll probably end up being the same type of thing. They might take one large account or something like that, or a couple. In fact, one of the traders does. It's kind of exception that he's still solo. He trades on his own. He doesn't want to. He did try going the other way. He did have a situation where he joined a hedge fund and had a large allocation, and I think he had like 500 million, 600 million at his maximum point. But he found that he just didn't like marketing. The staff was always trying to get him to go out market. He didn't want to do that. He just ultimately just cut it off and went back to solo trading. And now he's taking a few accounts, but accounts he knows, they're just single large accounts. People don't bother him. And so he's just trading a few accounts alongside of his. He doesn't want any employees. Absolutely. He will not let himself get into a situation where he needs to have employees.
Do you find most of these guys for this particular book were introverted?
Certainly some. As a generality, maybe more so than for most of the books I've done. I wouldn't say they were all introverted, but to some extent, I think that may be more of a commonality. But I don't know. Typically, I spend just a day with these people, sometimes two. It's hard to judge. And usually, nobody, if they're really introverted, I won't be able to use the interview. I kind of need people that are willing to talk and open up. It's almost guesswork for me to say whether in general they're introverted.
I always say with introversion and extroversion, as an introvert, and I can go stand on a stage and speak to 1,000 people in mainland China. But when it's over, I don't want to be around anybody. I want to be by myself and recharge my batteries that way. Whereas the extrovert's like, let's go party.
Yeah, probably more than the introverted. And I'm probably similar to you in the same way. I can get in front of an audience. I'm very, very comfortable. Any larger, the better, in fact. I'm very happy to speak to people I know. But the thing I hate most in the world is probably a cocktail party.
There you go.
Probably similar to you.
Okay, I got a name for you, and I hope I don't mess this name up. Daljit Dhaliwal. There's a story in the book. I'll let you run with it. He talks about meeting Ray Dalio. They talk about expected value, space, and the ocean. The floor is yours. Tell the story. It's a cool story.
Daljit, a big hero of his was Dalio. One day, he sees that Dalio is offering to sell lunch with him for the highest bidder. So he says, great, I'm going to bid for this. And he goes on and he sees he was expecting to pay really a lot of money. And he sees the bids are only like 10,000. He said, well, I'll do that. He kept on bidding, and sort of near the end of this auction, whatever it was, he's the high bidder at something like 50,000, I think, or something close to that. He had to leave the office and take the London Tube going home. It was kind of right near the end of the auction. And he gets out. First thing he does, as soon as he got reception on his iPhone, he looks to see if he's the final bid. And somebody beat him. And he's like beating himself up. He said, I should have been there. I should put in the last bid. He's sort of beating himself up because he missed what for him was this big opportunity to meet Dalio. And then it turns out the next day they call him and he said, Dalio has offered to do a second lunch. And he was the second highest bidder. And so he took that right away. So he went to have lunch with Dalio. By the way, he couldn't remember anything. He doesn't know if he ever ate anything or certainly what was there. To him, this was like a thrill of a life. One of the things that you mentioned is the thing about space. And he got the just mentioning things that he got from Dalio. It was the idea that the non-obvious thing is not really necessarily the best way to go and just a proper way to analyze the situation. So he said, we spend so much money going out to space in different ways and exploration, and there's nothing wrong with that per se. But you could achieve so much more scientifically by spending a fraction of that amount of money in ocean research. And that was just kind of just a different way of thinking. That what seems you think of exploration, new frontiers, you think space, but hey, a lot of the ocean is unexplored, and there's probably a bigger payoff, much bigger payoff for the same amount of money. What that same money would get you in space exploration. So that was particularly just like one angle, one thing he told me. I was asking things he learned from Dalio. I just mentioned that as an example.
Kind of that mindset shift. I mean, I look at where I'm at right now. I still scratch my head. I know the reasons why America is not putting really big investment into Vietnam. But my gosh, it's kind of like the ocean in a way. You know, people look at this space, and space is talking about China, but Vietnam is 100 million people. And generally, they love America, which is crazy in of itself. I can't really explain it completely, but they do. They're perhaps the most capitalistic country in the world, which is, again, hard to explain. But you would just think of all the places where there's opportunity, we often don't look at the things that are the smartest move. We keep focused on the big blinking light, so to speak.
That's another good example of the same lesson.
Yeah. Okay, one of your favorites. And there's so many ways we can go with him. He's been on this show, been around for a long time. A lot of people know him, big following on Twitter. I think I'm guessing you guys have known each other for a long time, pretty decent friends, I think. And this would be Peter Brandt.
Yeah, we're definitely friends. We know each other. At this point, actually, we met maybe 8 years ago or so, first time, 7 years ago. Neither one of us could remember if we had crossed paths before. We kind of knew of each other. There's a lot of similarities in the way we think and so forth. I mean, about markets and trading. In fact, I remember this, and I think it might have been your broadcast. I think it was. So you had Peter on, and I'm listening to it, and you ask him questions. And mentally, I kind of answer the question. And damn, if Peter doesn't answer it the same way almost every time. That really struck me. But I knew him, and I wasn't surprised, really. But hearing it, you're interviewing him, like I say, I'm mentally thinking what my answer would be, and it's like listening to myself in some ways. I always thought he had not only great lessons about trading, but very succinct ways of putting it, very colorful ways of putting it. I kind of regretted I never interviewed him for a Market Wizards book. And I said, if I ever do another Wizards book, he's got to be in it. And in fact, he was the catalyst for this book because Peter lived in Colorado, as I do, a couple hours away. He was going to be moving, and I knew he was going to be moving. And I was thinking of doing this book at some point, but I wasn't sure when. He mentioned he was moving, and in a couple of months, I said, well, I should do Peter's interview anyway. I'll probably do the book in the not that distant future. I should do it before he moves. Well, anyway, by the time we got around to scheduling it, he had moved. I had to fly to meet with him anyway. But that was the catalyst. And he's also the exception in that these traders are, almost all of them, are totally unknown. Peter, because he has this Twitter following, particularly, and I mean, he had the market letter that he put out, but that subscriber base was not that large. So before his Twitter following really exploded a couple of years ago, he still was completely unknown or relatively unknown. By the time I got around to doing the interview, he was known, at least to people who followed him on Twitter. I made an exception, and I explained why I said really felt important. First of all, he is still a solo trader. He kind of still fits that way. He's never managed money except for a very short period of time, which is in the book, the reason why. And he's still kind of unknown to the investment world, basically. He was close enough, but more importantly, I wanted to get his thoughts and ideas and advice in the book. I literally wanted to preserve it.
I love the one line. You're probably even going to guess which one it is that he says, I'm my own worst enemy. What's so nice about that in this day and age where so many people are either conflicted or confused, they don't know how to get from point A to B, they don't know the right mentors to follow. When Peter says something like that, it's just such a personal responsibility statement. Things are not fair in the world. Things don't work out for everyone. Things are a mess. But even if things are a mess, and I see this and having traveled and you see it in countries where far less developed than America, walk down the street and you see somebody hustling and you can tell that they hustle that street corner every day selling something. It could be a piece of fruit or whatnot. I love that Peter says he's his own worst enemy. It's just such a nice personal responsibility statement.
Yeah, it is. And it's also kind of ties in with his whole philosophy, which in fact, I think I used this for the chapter title, Strong Opinions Weakly Held, to the point that Yeah, when he puts on a trade, he has a definite opinion. He's looking for something to happen. But if it doesn't go the way he thinks it's going to go, he'll be out right away. He has no loyalty or to his original opinion. The odd thing is, or not so odd actually, he will get criticized on Twitter because people will say, people always want to show, hey, this guy isn't really that good. They want to, looking for excuses to show people up who are good. Somebody will say something like, Peter recommended shorting the S&P when it was like 1,000 points lower or whatever. What he doesn't say is he changed his mind like one day later. The point is that he's not tied to whatever opinion he has. Yes, he has a strong opinion at any point in time, but it can change in an instant. And that goes with the idea that he knows he's fallible, and therefore he has to react to what the market is telling him, not to think that he's right.
Jack, I know you're a really fair-minded guy. I don't think you have any bias. I think you go where the data shows you to go. That's my understanding. I think that's a fair comment. I don't know off the top of my head if women have been featured in the Wizards series, but I know if there have been, it's been a very small number. What would you tell women listeners if they want to start to think about or approach? Have you ever thought about how one can bridge the gap to get women to understand certain traits or perspectives or ways of being that these market wizard guys, the direction they go? Is there any advice you can give women on what they can learn from some of these market wizard guys?
Well, advice I would say, if they have an inclination to go into trading, they should, because I would bet, and this is just a guess, but if you took 500 men and 500 women and gave them the opportunity to trade, they were all people who wanted to do it, I would bet there would be more successful women than men, because men have a lot of traits that are inherent to our sex, which are not conducive to good trading. And women, I think, have some traits which are more common for women than men. So men may try to bully things, try to show, I'm not going to let the market win. I'm not going to let the market beat me. More inclination, I think, to be stubborn, probably. And women, I think, probably better on intuition than men. Maybe that's a biased statement. I don't know, but it feels true. Now, I've had a couple of women over the course of the books. I would love to have more. Trouble is, take this book, for example. So some traders on FundSeeder, our site FundSeeder, none of them were women. I put out a few inquiry tweets asking if you know anybody if you or you know somebody who is a phenomenal trader, let me know, because I'm doing a book on solo traders, unknown traders, and I'm interested in any suggestions. I got literally, I don't know how many hundreds, but many, many hundreds of recommendations. I cannot recall getting a single woman recommendation, or if there was, it didn't fit for some reason.
You wanted to include, I'm sure.
Yeah. I did have one woman that I did interview. It was actually a very good interview, and I wanted to use it, but I did it because I was in London. She had been recommended as a great, but she is a hedge fund manager, and it just didn't fit the theme of the book. It's also, her approach was a bit arcane for a number of reasons, but she had a very good story, and I'm kind of think that maybe at some point in the future I would include it. So the fact that she was a woman was all the more reason I wanted to include it, but it just didn't fit the book.
I'm going to shift gears on you to two movies really quick. The trader that you feature in your book, I'm not sure if I'm guessing right here, you might have already mentioned him, but two movies that I'm thinking of. I'm thinking of The Wolf of Wall Street. I'm seeing DiCaprio selling penny stocks. I'm also thinking of Ben Affleck in Boiler Room giving this speech to all these penny stock salesmen. And I think most people, probably you included, when you hear penny stocks, you think the pink sheets going back in time, a little bit of like, oh. But you have a story in this book that sort of rocks that foundation, huh?
Obviously, talking about Jeff Newman. For reference, this is the same trader we talked about going from 2,500 to what is now 80 million plus. He started with penny stocks because saw that's where the biggest moves were. That's where he could make the. God, he went in with some crazy assumption. He was shooting to make $1 million in his first year. He figured out how much he had to make every day to compound to $1 million. Penny stocks were the only way he saw that he could do this. The odd thing is, my impression of penny stocks and yours, I don't know much about them really, but whatever I do know about it, I can always think it's like a scam, a pump and dump scheme and all of that. The thing about Jeff, though, of course, he doesn't have any inside information or know anything. Almost everybody who goes into penny stocks will lose money, but he did phenomenally well. because where just real skill is picking up on things early on trends, whether it might be marijuana beverages or things like that. Basically, they're just technologies where they're still early on and he'll pick up and there's a lot of hype and he'll ride that and he'll get out. He has very, very good skills at getting out before it all collapses. I think the trade you're talking about was Sponge Tech, right? Is that the one you're thinking of?
Just more in general than just his overall strategy of going into penny stocks.
He would see something. We mentioned the cannabis beverages. So he saw this as an early trend. He tells a story, and this kind of gives a feel for what he always has to kind of try it as well. He goes into the largest beverage store in his region, Texas, and he speaks to the manager about how is this selling, and there's a particular one. And he says, "This is amazing. I was living in pain for all these years, and I started drinking this stuff. Just incredible." Seeing that type of feedback. So he got into that early and was doing really well. And because he kept on revisiting the store, just one day he comes in, this manager runs over to him. He says, "I got to tell you this. They recalled all the stock because they found some debris." And so he went right home and sold everything. Even though the thing completely collapsed, he had this great profit.
As you point this out, someone could say that was just luck.
Yeah. But so many times the luck is because you've done the work to be lucky, to be in the right spot. If he wasn't there talking to managers and visiting the store, never would have seen it. So yeah, it's luck, but he made his own luck in that respect.
Jack, I showed up at an event in Chicago, I think in 94, and you were speaking on the days with a couple other market wizards. I mean, someone could say, well, that was luck, Mike. You went there and got inspired. Well, I don't know if it was luck or not, but I had to go. All of our lives are kind of like that. You got to pull on the string. And if you keep pulling on the string, crazy stuff happens.
I'm a believer, by the way, that a lot of success, I attribute whatever success I've had, certainly luck plays an important role. I mean, the first job I got, I never knew anything about futures. I rode my way into the job, but I didn't know what futures were. I didn't know that was going to be my career. So it was kind of lucky that I put an ad into the New York Times, then had seeking positions wanted, not employers looking for jobs, but people who were looking to get hired. I put in a $15 ad just saying basic skills were, and I'm looking for an analytical job. And it worked. It was just a fluke that the director of research happened to pick up, hey, Michael Marcus was leaving that job and just happened to be looking that day. And I happened to have my ad in then. My whole career was luck in that respect. But I could have been lucky to get in and then not have the skill to do anything with it. It's a combination of both. But I believe that luck plays a more important role in many people's success than they typically are willing to admit.
Jack, all these new, I guess not new traders, but these kind of solo unknown wizards in this new book, has anything shaken your belief in some classic risk management? For example, something like very basic and straightforward, a stop loss. Is there any aspect across all these different strategies, all these different traders, and you can go beyond this book, do we ever get to the point where a stop loss becomes something that people need to question? Gosh, should I really have a stop loss? Or is that, in your experience, across the timeframes, across the traders, across the strategies, they all got a stop loss?
I think risk management, one rare exception I can think of, that wasn't in this book. Risk management is essential, and stop losses are a key way of doing it, but not the only way. So somebody like Amit we talked about before may not have a stop in right instantaneously. He may or may not, but not necessarily. But he's disciplined enough to know that he'll pull the trigger to get out right away. And you have to have sort of absolute discipline to do that. You don't necessarily have to stop loss. It's the easiest way to probably accomplish risk management, but it's not the only way. I think all the people in this book exercise extremely strong risk discipline. That's why you get these very large returns, but their maximum drawdowns tend to be small. Other than people who early in the career lacked risk management, so I'm thinking of somebody like Jason Shapiro, but learned from that and learned what they were doing was exactly what a bad trader does, and you have to do the exact opposite. Would then go on and see his old traits in other people and almost use them as contrary indicators. But once these people hit their successful style, at least all the people in this book have very strong risk management. The question you asked, if you had asked it me, and you may have, I don't know, last time we did speak in the last Wizard book, Hedge Fund Market Wizards, there was one trader in there that kind of blew apart everything I believed in and everything almost every trader ever said about risk control, because he was almost to an eye like a reckless trader. And it was, to me, miraculous he didn't blow up. But he was the type of trader who would just go into just trade against trends when they got extreme. He would trade against a trend all the way as the stock went up, but he still managed to do okay because, well, better than okay. When whatever, if he was short and the stock was going up, whenever it had a dip, he'd buy back a portion of it and then sell it again higher. And he was so good at kind of reaping these small little profits that even when he was dead wrong in the trend, he still came out ahead. But I tried to convince him that if he just flipped it around and traded, used this reaping profits, but went with the way the general trend was going, it'd be easier and better. He couldn't do it because he had to be fighting. He had to be fighting other people. That was his personality. He's an exception. And I said in that particular chapter, don't try this at home.
You mentioned Jason Shapiro. There was one little side nugget in the setup for that interview that caught my eye. I sometimes deal with it on this podcast, occasionally in my books. I think I've encountered it. He talked about wanting approval for the interview. You essentially said, well, I'm paraphrasing. I got a little bit of a track record here. I tend to make people look pretty good, or at least I'm honest about it. I'm kind of putting the truth out there. But he kind of was a little hesitant. And I had someone the other day, they approached me about a podcast, and I was not familiar with this person, but I saw the name and I saw the book, and I was like, well, sure, I'll have them on. Then they came back to me and they said, well, you give us approval. And I said, no, I'm not giving you approval. I said, you come on, you can look at my track record, and this is not 60 minutes. I'm not looking to hurt you. But why don't you speak to that notion of sometimes people being a little unsure about having their name in print or their ideas in print?
That happens. Shapiro is somebody who wants to be off the radar screen and said, I think he contacted me, but it wasn't to be in the book. When he talked about some of the things that he done or whatever, and it sounded interesting, I'm hesitant to say this, but it's the basic fact of why this happened. He went from being unsuccessful to successful. But anyway, earlier in his career, he went down to a bookstore. He was in Hong Kong then, and looking for a book on trading. He happened to pick up the original Market Wizards. And that book was to him that convinced him he wanted to be a trader and was kind of inspirational. He was coming to Colorado. He was coming to Boulder, where I live, at least most of the year. I also have another residence in Colorado. He was coming for a wedding. So he said, I'd like to kind of get together. That's okay. I said, sure. Would you be open interviewing you just in case it is good? It makes good copy. We went back and forth and signed it. Wasn't sure. Ended up coming to my home office. No, I just don't want anybody to know me. I don't want any publicity. I talked to him for a couple of hours, and I didn't have the recording on, and he had all these great stories. Once I was working on the book, I sent him another email. I said, hey, Jason, I really think you have some great ideas and some great stories, and I think it'd really be good to include you in the book. And it went back and forth, and he didn't want it. And then I know I sent him some stuff, and then he ends up saying, no, I'm sorry, I respect what you do, but I just don't want to do it. Then I sent him some short thing, a short email back, and he says, oh, screw it, let's just do it. I interviewed him again, this time by phone, but I already had spent time with him in person. And of course, I don't remember if we were into the virus, maybe not. But in any case, we did the interview by phone, kind of the same stories and stuff that we had talked about when we met.
You don't think about it because it's part of your nature. But somebody might say, well, Jack getting that particular interview was lucky. But not really, because there was just a persistence without being pushy that was taking place over time. And then something just trips in the interviewee. This has happened to me as well, too. You're not really bugging people, but it's just kind of they're getting to know you. And then one day it just happens. But it's not really luck. It's a process.
I had to do that follow-up a few months later and say, hey, your story was great. Would you reconsider?
Yeah. Hey, one last thought, Jack. A lot of people will look at the big picture news and they'll hear about high frequency trading and they'll think, oh my gosh, JP Morgan or some big shop, and they're making all this money every day, trading the speed of light, a warehouse full of servers. There's no opportunity for me. Well, isn't your book, the new book, isn't it just proof positive that maybe you can't be the exact traders and have the exact success of the guys in your newest book, but it sure proves there's opportunity?
I think I end the book basically that maybe the most important message is it is still possible to be enormously successful. Realistically, most people won't, of course. But these people show that the opportunity is still there. It is still possible. I'll be the first one to admit that for most people, they'll be better off putting money stock index and leaving it there for 30 years. But if you're somebody who doesn't have an edge, who doesn't have a strong desire to trade, you don't have a particular skill, then yeah, that's what you should do, the opposite of what I'm writing about. But for those people who have a passion for it, try it and seem to develop a methodology that has an edge, the opportunities are still there.
The book, Unknown Market Wizards, the best traders you've never heard of. Other books, Market Wizards, New Market Wizards, Hedge Fund Market Wizards, Stock Market Wizards. Did I miss one?
Yeah, those are all the standard format wizard books. I did that little book of Market Wizards, which was kind of my little narrative of some of the key lessons.
Cool stuff, Jack. Always enjoy talking. And I know we'll talk again because you're not going to stop writing. You're going to do more cool stuff, I'm sure.
Well, I don't know. I always think every book is my last one, but I've kind of been doing that for decades. So I don't know, but it's certainly a possibility. I always like our interviews because you kind of ask different questions. Sometimes you get a little bored because people ask the same questions, and you always take the conversation in different directions. And do I now have the record of most appearances on your podcast?
You or Tom Basso? You might be tied. I'll have to go back and check now because your first one was in 2013, I believe, for Hedge Fund Market Wizards, but there's been a lot in between. Look, I'm over 900 episodes now, just past 10 million listens. That's really kind of crazy. And I have to thank you. Look, if you and guys like Tom did not come on early on and give some appearance credibility, I probably could not have gone out and asked someone like Daniel Kahneman to come on. You had to build a little steam behind you to get other people to come on. So
yeah, you've done very well. Nobel Prize winners and everything.
Hey, where can we send people? You're all on Twitter. There, obviously, your books are all on Amazon. FundSeeder is one of your sites. Is there anywhere else you would like to send people?
It's actually jackschwager.com. I'm kind of a little, I don't have devotion to keeping it up to date on everything, but people can find some old podcasts there and a few articles and a number of articles.
You just made me think because as a guy who asks questions too, I'm quite happy that you say that I ask different questions because you're a guy that asks questions, so you don't want to hear the same old shit all the time.
I try to go with the conversation. I try to have a conversation and let it go where it goes. I hate the idea of coming in, and I think that they read deadly. If you come in with a list of prepared questions, I sometimes hear this on podcasts and they're unlistenable. I don't really read interviews very often, but if you read it, but you can kind of tell, it's like, person will answer it, raises some really interesting point, and then they'll ask another unrelated question because they're just going through their checklist, and it's deadly. So I've learned in my life, there's two ways to learn. You either learn from people who do things correctly and trying to learn from them, or you do learn from people who do things really poorly and just do the opposite. In terms of interviewing style, seeing how poor that is kind of a reinforcement of doing it differently.
So you have enough intuition to know that I had no written questions down before this podcast.
No, I know you don't. And it doesn't sound like that. You do what I do in my books. You have a conversation. Probably better than I do, because if I transcribe my actual conversation, it would be like, well, first of all, each interview would be like a book and it would be too long. But the only reason my interviews work is I have the luxury of being able to extract and shape it and all of that. If I did a literal transcription of it, it would be terrible. So you're able to do podcasts that are quite listenable on the first take. So that's not my skill.
Jack, cool stuff. Thanks for the nice words. And again, thank you for all your work. I know there's millions, literally millions. I know we've talked about this before. There's got to be well over 1 million copies in total of all the Market Wizards books. And it's just phenomenal. I think anybody else that's written a trading book or an investing book, they're just saying, gosh, I hope I can pass that guy Jack one day. You got a big head start on everybody.
Yeah, I never know how many copies sell in places like China and all of that. Foreign sales are kind of odd, and you never really know. I'm sure it's in the millions.
Hey, cool stuff, Jack. Again, we'll talk when the next one comes, even though you're not sure it's coming. I know it's coming, so we'll talk soon.
Great talking to you again, Mike. Have a good one.
I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.